On behalf of IVPA Executive Council, it's my pleasure to welcome Mr. Thomas Milke and our own dear Sandeep Bajoria and our esteemed audience from all over the world, from the veg oil world. First time I think we are going to have a bus session. Let me promise, no presentations, no complicated charts, and no huge Excel sheet grids. Hence, there will be no presentation papers that will circulate. Of course, we'll see how to do it. It perfectly suits post lunch in India, but I'm pretty sure that you are from different time events. He not only knows the numbers, but he also understands the feel for the number set. The vast amount of interest in this webinar is mostly thanks to our dear Thomas Milke and our Mr. Sandeep Bajoria, and and the interest in our speakers and the content that we are going to have. Believe me, I'm thrilled to announce that we have got over 970 odd delegates right now. It's a record of its sorts. Our seasoned and erudite Sandeep Bhai, as CEO of Soybean Oils, is a distinguished personality from India. He is currently the president of International Sun Oil Association and chairman of Global Oil Committee, and has been president of SEA and chairman of Kuwait and Cotton Crushers Association of India. We will hold another webinar to introduce these two gentlemen. We have amongst us our beloved special mention to Mr. Nadir Godrej. Welcome, sir. And Dorab, welcome. Happy. Govind Bhai, GK Sood, and many more. And dear industry colleagues and friends like Pradeep Chowdhury, TK Kannan, let's welcome Sanjeev Asthana from Ruchi Soya, Ms. Bhavna Shah. Thank you for being with us here. Vijay Datta and Dr. Mehta is also, I see him here. And many Indian and international trade bodies and who is who of the Indian and global trade are here. I'm thrilled to say we have a huge participation from our regular supplier countries who help us maintain the supply chain for 1.3 billion population like Malaysia, Indonesia, Argentina, Brazil, Ukraine, Russia, who help us in all this, making this happen. But we also have delegates from special mention because it's Japan, UK, Zambia, Netherlands, UAE, Belgium, South Africa, France, USA, Portugal, Costa Rica, Colombia, and many more. We have dignitaries from various embassies. Welcome to you also. International trade bodies, and even from the World Bank. I see that. During shutdown, the port stocks in India had come down very badly. So we held our last webinar on 29th May. It dealt with not just the prices, but provided a 360-degree view, including government goals, the branding, and the agri reforms. That time we saw that the port stocks became very low in India, 560K or something, and needed an urgent replenishment, rebounding the palm demand very strongly. The palm rally with almost zero pipeline stock was more predictable event than the vaccine is predictable in the current times. At IVPA, we continue to work with the government, providing the right and honest inputs on various issues pertaining to the stocks, supply chain, price direction, and policy matters. We are also working on the macro plan of strategic and practical action plan for domestic oilseed production towards improved self-sufficiency ratio. I mean, you can change the ratio a little bit. We're going to talk about it. Reducing import dependency, managing consumer prices, and keeping farm incomes at optimum level, managing the treasury, and and especially the when the consumer prices, especially when consumer and farmers in India, the differentiation is a very thin line. GDP pressures. It's a huge task for government of India to maintain the equilibrium point in volatile markets. It's almost like a trapeze act with 4 geometrically spread dimensions. If you pull one side, the other side shrinks. The market events have been very dramatic. We saw huge basis change all the way from 130 to 140. And Mr. Milke and Sandeep will explain why. And a huge movement in soybean oil prices, and palm oil, as you know, has gone up from in about a couple of months from $520 to $720 CNF India. US-China bean trade continued. Brazil became more expensive than US for beans. Indonesia has reassured the B30 program. India demand for palm is slow at the moment in August. And after a huge import in July, which beaten our own estimates of 800K, and total import were 1.5 million tons in July. We expect, subject to discussion, August, September, October to be about 700K on average. On October, November, December, you can expect palm demand of 600 to 650K on average per month, as we have 14% more acreage planted for oilseeds to be harvested from September, assuming that the monsoon rains retrieve back well in time in September. We are at the crossroads of a market. I see many important players with their biases towards bullish and bearish outlook. It's like when I speak to people, they have a backpack of all the information, right? Everybody has got some bullish bias. Somebody is seeing the production drop in the Malaysia, Indonesia. Somebody is saying slacking demand. So all this put together, everybody, I'm sure, wants to know or reaffirm what next. Luckily, we have Thomas here and Sandeep here. Let's prepare for a high voltage session. Please fasten your seat belts. We have received over 150 questions on the markets. It's unbelievable, the quality of the questions that we have tried to answer some of them. I don't know how to handle so many questions, but we tried to keep them in mind. Thomas also, I had repeatedly asked and appreciated the question that we got beforehand. Thanks to everybody for this interest. Before we start, I thank our IVPA task force, especially Kamra, Mr. Vipin Gupta, Mr. Simarpal Singh, Mr. Amarendra, and our technical team and IVPA dream team who made this huge event possible with perfection. With that opening words, which I took exactly 6 minutes, I was prepared for 7 minutes. Over to Thomas. You got a minute more. Over to you, Thomas. Welcome. All yours. Please unmute, Thomas.
Can you hear me now?
Perfect.
Good. A very warm welcome to everybody. It's a real pleasure for me to participate at this event. At this time, I look back to the early 80s. It was 1980 when I visited India for the first time. Since then, I have followed the Indian market very closely, and I'm very happy about the many friends I have found in India and the good contacts we have. We are we are analyzing the global market supply and demand fundamentals, trade, prices since 1958. We want to be of service to you. We want to help you to better understand the global market. We want to give inputs. We want to provide with as recent as possible statistics and projections. And I want to invite you, everybody, to seek our assistance and give us the opportunity to be of service to you. We are releasing, most of you know this, daily and weekly and monthly publications, and we also offer services, individual, tailor-made services to our subscribers who can call us at any time and seek our assistance. So I look forward to sharing our views of the global market, and thank you for giving me the opportunity for doing this. Back to you.
Yes. Sandeep, over to you.
Yeah. Hello, Sudhakar, the president of IVPA, and Ms. Thomas Milky, our great opening batsman always, world over. It's a great session. Today we are all logged in and we have an audience from all over the world. And it's very nice to see everybody joining in. Who's who of world vegetable oil is here today. Friends, we have seen with the COVID situation coming up, the world economy shrinking. The IMF forecast, which was there in June, had said the world economy will shrink by about 5%, 5.5%. And the major economies, apart from China, will shrink by 5 to 12%. Only China would probably show a growth rate of 1%. With this kind of a forecast and gloomy situation, the Fed from US and the European central banks and Japanese banks pumped in great amount of money. Even the countries, every country put in the special package for the COVID. And with this kind of a liquidity and tremendous injection of trillions of dollars in the system, we saw the markets going up again. You see the equity markets, Dow Jones. From 29,500, it fell down to 18,500. And now from 18,500, it has recovered to 28,400. Nearly 95% recovery in the markets. So the global liquidity at nearly 0% interest rate can do this kind of a magic again. So this is what we are seeing. And same way we saw the crude, which was minus $37, negative crude prices, first time seen in the history on the futures and NYMEX, has now $42. We see the bullion, gold and silver touching the record high. So with this kind of a macro situation, whereby we see on one side that the real economy is in trouble, but with the injection of so much of liquidity, asset prices and other things have gone up so much. Friends, in this kind of a situation, we are today going to analyze the demand and supply for veg oil and understand the factors which are driving this demand and supply. One more thing which I want to tell you is, in world, 75 million tons of palm oil is produced, out of 50 million tons is exported. In world, about 60 million tons of soya oil is produced, out of 12 million tons is exported. And about 21.2 million tons of sun oil is produced and 12 million is exported. So whatever palm oil is produced, 2/3 of it is exported. So palm is a major price driver, which we have to always understand. Friends, with this kind of a situation, everybody is also looking how to boost the immunity, personal individual immunity, immunity of oneself, immunity of family, immunity of business, organization, and nation. So this is, everybody is focused. Secondly, in India, I must tell you, we are all looking at spirituality as well. We are a spiritual nation, but with this COVID times, life and death situation, I think people have become more spiritual. So I think out of the troubles which we are having of COVID, we are having good amount of benefits out of COVID. At the same time, work from home culture is giving a new dimension to everybody around the world. And I can tell you the efficiency has really increased. My own people in my own company, Sunwin, I see we are efficient 20% more than what we were before. So this is the new things which you have learned, and we must take this and continue with this. The program which we have today is a very crisp program, and we will be having on palm oil, Mr. Sudhakar Desai, will be questioning Mr. Thomas Milkey from 3:15 to 3:25. Then from 3:25 to 3:45, I'll be putting up questions and discussing on soy oil with Mr. Thomas Milkey. And thereafter, from 3:45 to 3:50 on biodiesel, Mr. Desai will be talking. From 3:50 to 4 o'clock, we'll be talking on sun oil with Mr. Milkey. And 4 to 4:15, we will be having a price outlook. After all discussion, after all deliberations, after all questions, what's going to be the price? That's what we're going to discuss 4 to 4:15. Thereafter, we will have a 4:15 to 4:30 question and answer session, which will be conducted by Mr. Vipin Gupta, Vice President, and then vote of thanks. So this is going to be a very crisp and proper program. Now over to Mr. Desai.
Thank you, Sandeep. We just straight away go into session. Thomas, let's first we would like to have your views on the production side of the palm oil. How do you see Malaysia, Indonesia production now until December? What's your thoughts on that?
Yeah. Palm oil production worldwide declined unusually sharply by about 2.6 million tons from a year ago during January-June. This was unexpected, particularly the decline in Indonesia. But this is what we realize now. Production also in April-June was below expectations, creating lower than expected stocks despite the decline in exports and despite the decline in usage. Now, the outlook for the rest of this year, July, December, we expect production to recover. We expect a moderate recovery from a year ago in July, September. Malaysia, August is not moving as good as expected. It looks like August will be down from July. It looks like that the peak in Malaysian production was already reached in June with 1.9 million tons. August and September is unlikely to reach this, but still there will be an improvement, and there will also be an improvement in our opinion in Indonesia, so that we believe that production and stocks are going to recover in Southeast Asia. A bigger increase from a year ago than in July, September is likely to occur in October, December. I say this despite the labor shortage, and we have seen a lot of reports, and some reports are indicating the labor shortage has not been as bad as expected. But our contacts, and we have some very close contacts, particularly to Malaysia, they indicate and they suggest that the labor shortage now becomes really severe, with plantations lacking 2,000 to 5,000 people in July, September, and that the problem is likely to get worse towards the end of this year and early 2021. So we have to keep this in mind. Biologically, we should see a recovery in production. We don't know how much of the production can be harvested and how much is lost in the field because of too late harvesting, rotting of fruit bunches, and so on and so on. So this is an uncertainty, but still we expect, bottom line, we expect an improvement.
Okay. Thanks much, Thomas. I would come back to the biodiesel Indonesia obvious question on its impact on prices, but this is the times when annual prediction or 6 months is uncertain under these circumstances. So probably we should look at quarter until December outlook. So I would like to question, compared to last quarter, what is the percentage change in export demand for palm for next quarter in your estimate? And then I know there's a whole statistics. How do you see the end stock evolution as of December and both for Malaysia and Indonesia, please?
Before I answer this, let me add that overlying problems in the palm oil market on the supply side will be and will continue to be the impacts of reduced fertilizer application towards the end of 2018 and 2019, which has already affected yields this year, will continue to affect yields in 2021. We have to realize that also the replanting activities, with some of the plantations having stepped up replanting, is also going to have a negative impact on production at the towards the end of this year as well as next year, and that the age structure of the trees is still unfavorable, which will curb yields. So we keep this in mind. Palm oil production worldwide has deviated. Palm oil has lost the growth path of recent years. We are no longer going to see the big increases in palm oil production, which we have seen in the past 10 or even 20 years. The growth rate in palm oil is going to slow down. And this is also partly due to the fact that many plantations have slowed down new plantings because of environmental pressure, NGO pressure, and other factors. Governments are giving fewer licenses and all this. So longer term, the palm market is going to develop differently, with lower growth rates fluctuating, but lower growth rates than in the past 10 or 20 years. And this will make it necessary for soybeans, for sunflower seed, and for rapeseed to take over some of the growth in future demand of oils and fats, which over the past 20 years has been satisfied by palm oil. Okay, so I wanted to add this. Coming to your question, export-wise, yes, we realize there will be some slowing down in exports in August. For the July-September quarter, we still see world exports of palm oil to rise. Our export estimate is 13.8 million tons for July-September, which is close to the year-ago level. Palm oil exports plummeted in January-May. They increased sizably from a year ago in June and in July, some slowing down in August, but I see some improvement back in September, partly because of sun developments, partly because of insufficient supplies of rapeseed oil, and partly because of problems in Argentine crushings of soybeans. Yeah, stocks. We forecast palm oil stocks to rise in the current quarter from the low of end June and continue to rise in October, December. So this also tells you something how we expect palm oil prices to develop. And I will come back to it at the end. If our forecasts of rising palm oil production and stocks materialize in Malaysia and Indonesia, palm oil prices should come under pressure in the next 6 months.
Okay, so would you like to say carry out numbers of your estimate now, or would you like to keep it for your?
No. I can tell it now. I can tell it now. And you know, with all the uncertainty and uncertainties this year, I think, are bigger than normally. There are still too many things which we don't know, and where we are making tentative forecasts. So we assume that palm oil stocks in Malaysia will recover to 2.05 million tons at the end of September, as compared to 1.7 million tons, yeah, at the end of July. And we expect a further increase in Malaysian stocks to 2.2 million tons at the end of December. This is on the assumption that Malaysian palm oil production this calendar year is about 19.4 million tons, as compared to 19.9 last year. So 2.2 million tons for Malaysia. Now, here comes the tricky part, which is Indonesia. We had unusually low stocks in Indonesia of 3.9 million tons, according to our balance sheet, 3.9 million tons at the end of March. This was just 1 month of requirements, which is very low. A year ago, stocks were 4.6 million tons. So 3.9 million tons at the end of March. There was some recovery because of low exports from Indonesia to 5 million tons at the end of June. We project Indonesian stocks to 5.35 million tons at the end of September, still down from a year ago, and about 5 million tons, some reduction in Indonesian stocks to 5 million tons at the end of December, which is, in my opinion, moderately bearish from today's point of view. But it can change quickly if we get some unexpected developments like ongoing large purchases from China, additional problems in sun, Argentine crush problems in soybeans. Then in fact, there could be a greater dependence on palm oil in the rest of this year as we are currently projecting. Okay?
Yep.
Sutaka?
Thanks, Thomas. Clear. I know you're constrained a little bit by your movement because it's webinar, but otherwise I see you. I normally saw you all the time, full vigor, movement. Okay, but within that. Yes. Now let's go to the critical issue called biodiesel of Indonesia, B30. What are your thoughts on that?
Well,
just one comment, please. Sorry, there is some disturbance coming from your mic. Probably just be aware.
From my mic.
Yeah, maybe because of the movement. Just be aware, please.
I will calm down. I promise.
Thank you very much. No,
but you raised some hot issues. It's not easy to stay calm. Indonesia, the biggest swing factor. Yes. I wish we know what is really happening in Indonesia. Very difficult to read the market and very difficult to interpret the different indications we get. So what I can offer you are our estimates, and we assume that Indonesian consumption of biodiesel will be around 6.9 million tons in the current calendar year. This is down by 500,000 tons from a year ago. So of course, this gives the answer, Sutaka.
Yep.
They are not fulfilling B30. Of course not. They are doing what they can to bridge the gap between the biodiesel price and the palm oil price and the price for fossil fuels, which is unusually wide. So if they really consume 6.9 or 7 million tons domestically, you can probably call this a success in this current environment of a widespread, a wide premium of biodiesel as compared to fossil fuels, but far away from B30. Indonesia has started to test B40. They are very optimistic that they will continue to raise this. I don't expect that B40 will be made next year, probably delayed until 2021 or 2022. It's going to be a very difficult way. Just assume Indonesia would find the financial ways of supporting B30, and they make success in expanding domestic consumption of biodiesel. The prices of palm oil would react considerably to the upside, making the financing of this biodiesel program even more difficult. So the market will have a very important purpose. If production continues to be insufficient, as it was so far this year, if world palm oil production and Indonesian production is insufficient as compared to consumption, then the prices will react and widen the premium between the biodiesel price and palm oil and the fossil fuels even more. And as I'm not very optimistic about the price development in crude mineral oil, I think it will be very, very difficult for Indonesia to even reach 7 million tons or 7.2 million tons in its biodiesel program. Mm-hmm. Yeah, it's political. To a certain extent, it's political. To a certain extent, it is reality of a wide premium. And sometimes politicians have to realize realities. And sometimes the realities are stronger at the end of the day than the political intention. So yes, they make progress, but this year they fall back and they can only catch up in coming close to B30 next year if production rises sizably, which is still uncertain.
Yeah, Thomas, it's a very, very uncertain world, dynamic, volatile world. And I would say for the rest of the thing, there is oil world, right? Because you publish this weekly and then everybody can benefit from it. But of course,
yes, and this is what we offer. We weekly and daily we look at the changes and we look at the swing factors, and yeah, we try to describe the global market, of course, every day.
Yeah, so we come to the last question on palm before we get into the price discussion at the end of this session. I would say that actually in May, the entire biodiesel program was in a huge question when the fuel demand itself was a big question mark. But then during the lockdown also, when people were not even moving to the nearest shop, the fuel prices bounced back to 45. And thankfully, Indonesia maintained its ability, the willpower to maintain the biodiesel program. We hear of the levy increases, of course, to $70, but I think they've shown a great resolve in maintaining and supporting amongst various things for the price rally that has happened. But now, during the last 2 months, when India started buying, Asia started buying palm oil, Horeca gradually started opening it up. Of course, the restaurants and canteens and everything is not fully open, but at least there is a takeaway in India. It'll be amazing that in India there are more than 500,000 outlets dispensing food. Okay, so similar things have happened, and amidst that, the question mark was biofuel. But I think now I would read from you, 6.87 million is also not a bad number. It's a good number for supportive.
Yes, but in this environment, it's a good number. But we have to realize that in the rest of the world, biodiesel production and consumption is declining. And worldwide, there will be a decline of approximately 3 million tons in biodiesel consumption. And this is for the factors you mentioned: declining diesel consumption, lockdowns, economic development, which is much worse, and of course the price situation. And this is a big game changer. In 2019, world biodiesel consumption increased by 4 million tons. Now we are looking at a decline of almost 3 million tons. And 2020 is the first year ever in which world consumption of all oils and fats are declining. Yeah? The first ever. And the biggest downward adjustment comes in biofuel. It is also the first year in which world production of all oils and fats are declining. And there are some COVID-related production deficits, you know, so the changes in biodiesel help the global market to keep consumption for food at a relatively high level in many countries at least, and the adjustment comes in the energy sector. Yeah, for India alone, we expect palm oil consumption to drop by 2 million tons, probably 2.2 million tons in the current season. And of course, more imports and consumption in India for soybean oil and for sunflower oil. But palm oil is down.
Yes, I agree with you. 2 million has happened mainly because of very poor pipeline draw in April, May, June, during especially the lockdown period. And remember that we had the refined oil licenses no longer valid, so it had to shift to the crude oils. But if really, it's all about oil here. But if you really start seeing from June onwards, it does to me in India look like we are back to 80-90% of demand. July is a very significant demonstration that we had 1.5 total imports. It looks like normal. Of course, we have the COVID, but let me not deviate. I wanted to ask China, the bean balance sheet, and in the last rally, China also supported the palm buying. Do you expect that in the next 3-4 months? Or do you expect the beans to be insufficient and China needs to buy palm oil more than what they do? That's a very critical piece.
I expect Chinese imports of palm oil to slow down. Yes, there was a big increase in purchases from China starting already in May. We see this in rising imports until July, early August. But China has done the job of refilling the empty pipeline. Also, weather conditions, it's going to be winter in many parts of China, and this will also support the scenario of a slowdown in palm oil imports. I'm not optimistic that palm oil will continue to push palm oil prices and support palm oil prices. No. Palm oil China has shifted back to soya and rapeseed and sunflower, and I think we cover this later. Very, very important, the substantial increase which is now taking place in Chinese stocks of soybean oil for strategic reasons, and the reserve stocks in vegetable oils being built now. This is going to be built in soybean oil and not in palm oil.
Okay. Yes. Now let's go soft now. For a while, Sandeep ji, over to you for your questions on soybean oil, and then we'll come back. I'm getting more eager to see the price outlook session. Yeah, one suggestion, Sandeep ji, can you ask other people to log out of Wi-Fi because it's a little unclear? But go ahead, please. Please unmute, Sandeep ji.
Thank you, Sudhakar. Now let's get to the soya oil. Soya oil has been a very strong, important oil for the country like India and everywhere. And we saw when the COVID was there, uh, out of the home consumption, palm suffered, but soya oil consumption in fact increased. So soft soil have been very supportive in COVID times. So Thomas, I would like to ask you, given the low farmer selling in Argentina, crush operations are not running at full capacity. Do you see the recovery in crush in Argentina if government reintroduce the differential export tax system? Please let us.
Yeah, thank you for the question. Like biodiesel in Indonesia for palm oil, the soybean crushing activity and the farmer selling in Argentina is one of the most important swing factors to watch for the soybean complex. And I would say it is most important for the price trend in soybean meal. So what is the situation? The farmers only sell soybeans for their cash requirements. They are not selling additional quantities of soybeans because if they do, they get pesos. But they don't want the pesos because of the wide discrepancy and the weakness in the black market, and they don't want the pesos. What we know is Brazilian soybean stocks are very low. We don't know how low, but they are very low. And as a result of that, Brazilian crushings and exports of soybeans and soybean meal and soybean oil will be low until at least January. Secondly, the US is already crushing close to capacity at the moment. There is very little additional potential for the US soybean crushing industry to increase crushings to satisfy rising global demand for soya oil and meal. So it's Argentina. And Argentina is the by far biggest exporter of soybean meal and soybean oil. Now, my forecast is that Argentine soybean crushings will remain depressed. And the outlook is poor for September and October. And we may get a reaction in the soybean meal price already in the next couple of weeks because of the prospective decline in world export supplies of soybean meal. This, of course, also affects soybean oil. At the moment, soybean oil stocks are at a 5-year low. Sunflower oil stocks even are at a 30-year low in Argentina for the beginning of August. So also Argentine soya oil export supplies will slow down. We have record stocks of soybeans in Argentina, but the record stocks of soybeans are not accessible by the market, and this creates a very, very big uncertainty for soybean oil and soybean meal in an environment of ample world stocks. World stocks of soybeans are ample, and the outlook for next season is for a continuation of ample world supplies. But Argentine stocks are not accessible to the market, and the huge Chinese stocks, which we currently have, are also not accessible to the world market. We have to keep this in mind. Banjib?
Yes. Thomas, now I want to ask you, so far in 2020, it was the oil share which was dominating in the oil production. Do you see the soybean demand recovery in second half of 2020?
Yes, I think this is very likely. Starting in September, December, probably until March, soybean meal share should rise. Soya oil share should weaken. Yes.
Okay. What is the impact of US-China phase 1 trade deal on global market so far in 2020, and what's the outlook?
China seems to be buying everywhere. China has concentrated its purchases of soybeans in Brazil during January, July. It is now switching to the US. It has switched to the US for shipment from September onward because of very tight Brazilian supplies. China has reacted to relative prices and have generally purchased from origins which offered the best price, which was Brazil in the first half of this year, and it is now the US. At the moment, Brazilian soybean prices are going from record to record every week. Prices are too expensive, supplies are not there, so we assume that US exports of soybeans to China will increase probably by 8 to 10 million tons in September, February. This is big. This is big. Total Chinese imports probably decline, but dependence on the US will rise. Now, what does it do with the US-China phase one trade deal? Well, significant increase in grain imports from China. There appears to be a grain shortage in China. This has been a surprise that China purchased so many, so much grains in the US and elsewhere. This is probably continuing. We may see a surprisingly large total Chinese imports of corn next season. For soybeans, I'm not so sure. For soybeans, we expect Chinese imports, total imports, to decline because stocks at the moment are up 7 to 8 million tons from a year ago. The domestic crop is rising 1.5, 2 million tons in China. Domestic soybean crop, it's a little bit early. We don't know the results of the floodings. China will swing back to Brazil. China has already purchased a lot of new crop Brazilian soybeans and even purchased Brazilian soybeans for the crop of 2022. So I think we will see the same pattern happening again. China is going to concentrate on South America from February onward and neglecting US soybeans. Sandeep?
Yeah, Thomas, recently the President Xi has gone on record saying China needs to conserve the food. This is the first time and such a big thing is coming from the President himself. Country like China saying this, and probably because of the floods and because of the flood in the food growing balls, whatever the situation. And with the news which was coming in that China is building the strategic reserves, and you rightly said reserves are mostly going to be of soybean oil. And unofficially what was understood was maybe 1 million ton they will make purchase from local markets and 1 million ton they will purchase from overseas market. Something of that was there. So with this situation, I believe what do you see is China's in-house consumption of oil and fats and meals with this kind of a situation?
First, yes, you are right. I fully agree. China is building strategic reserves in food and particularly in beans, soybeans, in soybean oil, not in rapeseed oil. 5 years ago, 7 years ago, it was rapeseed oil, but the domestic rapeseed crop has plummeted by more than 50%. World supplies of rapeseed are tight, so they go for soybean oil. Now, we don't know what will be the final goal and what will be the speed of the recovery of or the speed of the increase in reserve stocks. We don't know this. If they continue to build large volumes, my price forecast has to be changed. Then we are probably too optimistic. We are probably too pessimistic in our price forecast for the next 6 months. We were surprised by the huge soybean oil purchases of China in South America, the US, and Russia, which has taken place in the last three months. Yeah, so this is a swing factor to watch, but what we are going to see on the supply side is another record soybean production in Brazil. Brazilian farmers are expanding soybean production and soybean plantings. We believe we will see at least 40 million hectares. We should not look at the government numbers. We should not look at CONAP. They are all too low. But there is significant area which we can call illegal area, which is additionally planted, bringing the total soybean area, we think, to 40 million tons. And there are weather issues at the moment. It's too dry in Argentina and Brazil, yes, but it's still early. And if weather conditions normalize, if we get La Nina, we should get improved rainfall also in most of Brazil. And we are optimistic that the Brazilian crop will reach at least 131 million tons next year, a new record. So this should create ample world supplies of soybeans in the next 12 months, particularly if China reduces soybean imports, what we currently expect. Sandeep?
Yes, Thomas. The SME demand from Europe for Argentinian SME, we saw some deals happening about 2 to 3 weeks back. But now in last about fortnight, I've been seeing there is slowness in that. What's the situation of European demand of SME from Argentina?
It's correct. We have had seen some surprising purchases in July and good exports. Very price sensitive. Prices worked also because of very high European prices of biodiesel. So it made sense to import Argentine oil. For the rest of this year, very difficult question, Sandeep. It's very difficult. The Argentine crusher has headaches because he cannot acquire soybeans. This raises the soybean oil price and soybean meal price, making it more difficult to offer SME at attractive rates for Europe. Very difficult question, but the scope for any large recovery in Argentine biodiesel production, in my opinion, is very small for October, December.
Okay, yeah. Thomas, I just wanted to say, because the swing factors we have to keep under watch are, one is Chinese buying from strategic reserve, and secondly, SME buying from Europe. And thirdly, from Indian side, I would like to just say that our shipments in August are going to be about, August shipment of soybean oil of South American origin is going to be about 300,000 tons. But we have purchased over 100,000 tons from Russia, Turkey, and Egypt. This is the first time that 100,000 tons of oil is coming from origins other than South America. So August shipment total imports into India are going to be 300,000 tons from Argentina and 100,000 tons from these alternate origins. So probably this has put pressure on the basis in Argentina, which had one time gone up to over 440 points.
Yes.
And now we have seen it has come down to 130 for September and 150 for October, November, December.
Yeah, so I think this could change, but this could change. This could change again.
India is always a swing factor also, because out of the total, as I said, the Argentina exports 6 million tons of soya oil and India buys about 3 million tons from Argentina. So Indian demand is also a big swing factor in Argentina. And we expect in September shipment to India shall not be more than 200,000 tons. And OND as a block also together not more than 0.6 million tons. So with this kind of a demand forecast from India and the Indian soybean crop, which looks like about 11 million tons. SOPA has projected 12, but we consider it at Sunwin at 11 million tons because of some excess rains and because some pest issues and all thing. I don't think so. It should be more than 11 million tons. The Indian meal exports this year is generally is going to recover, and we expect about 1 million tons of meal to be exported because we are back in some parity. What do you think about Indian meal exports?
Yeah. Three things. You are right. India, I come back to meal in a second. India is the world's biggest importer of oils and fats and has an important impact on prices. At the same time, the Indian dependency, more than 70% of the domestic consumption has to be covered by India, is for India a very dangerous situation where it is difficult to relax. You have to get it somewhere. And it is so important, and I come back to meal, but don't forget, if I'm correct with our analysis here in Oil World, that the growth potential medium term, next 5 years or next 10 years, the growth potential in palm oil production is going to slow down because of new plantings, lack of replantings, and all this problem. India has to find alternatives for its ongoing increase in consumption in the next couple of years. If it is not the domestic market, I know you have very ambitious, and I hope you are successful, which is not easy because of your small farms. You can do it partly on the domestic market, but if not, it is necessary for India to cover its requirements in 5 years and 10 years from now, that world production and export supplies of soybean oil, sun oil, and probably rapeseed oil, which we don't see at the moment, but soya and sun oil will continue to grow. Now, meal demand, so it's also risky. You have big buying power and you can be very strong as a buyer, but at the same time, you have the problem of satisfying your import requirements. Big challenge. Meal demand. Your domestic meal demand is maximum, in my opinion, maximum 5 million tons. Meal prices, yes, there is some potential that short term the meal prices recover, but only short term because of the Argentinian issue. 2021, if our forecast, which we outlined last week in our monthly in more detail, if our forecasts are right, that there will be a global production surplus in soybeans by 7 to 8 million tons, this will bring soybean prices under pressure, and soybean meal is very likely to follow. I don't see Indian soybean meal being competitive in the global market in 2021, and I'm quite pessimistic. Well, fine, if you have 11 million ton soybean crop, you will not be able to crush it because your export is uncompetitive, with the exception of organic soybean meal. This is very interesting, and you should probably work more on this. At the moment, you export about 70,000 tons of organic soybean meal, mainly to the US, but there is Europe, there is South Korea, there is Japan. You should make more progress in offering and selling GMO-free soybean meal to the world market at a premium. Then you could compete. But without this, I'm very skeptical that you can reach 1 million tons of soybean meal or more than 1 million tons of soybean meal. And this will curb your soybean crush. You will have large stocks of soybeans at the end of next season, and it will also curb your domestic production of soybean oil. So I don't share your optimism, Sandeep. I'm sorry.
Okay, let's see and watch how the situation comes. Now I would like to ask Mr. Sudhakar Desai
Yeah,
to
yeah.
ask something on biodiesel.
Yes, not really biodiesel. I think we covered the European demand, and I take note of the point which Thomas mentioned that biodiesel, we are likely to lose 3 million tons, but probably it's in the grids. It's in the thinking already.
Yeah.
What's its impact on the prices? Uh, but I would say that I take your point from Indian context because we got many Indian people here in this, Indian players here in this conference, maintaining a right balance between imports and domestic production, going ahead with the domestic production in a strategic manner, do all the things necessary to make a strategic shift happen from wheat and rice. Farmer has to be convinced first for making that shift happen. Palm oil, yes, we have heard it that there is a 2 million tons potential. It comes with some money on the ground to be poured. Summing all that, I think in O&D, October, November, December, I think probably suggests that probably we need about 600 to 650K of palm oil each. Soybean oil should be about 300K still, and sun oil about 180 to 200K. These kind of imports, plus supported by the good domestic crops. The meal question that Sandeep asked is very interesting because that is going to decide the crush pays in India in terms of soybean. And if people are listening, yes, we have good agriculture prices, good bean prices, but then you need to find an outlet to the meal. Otherwise, what happens? The processing industry will suffer, squashed between high bean prices and inability to market the meal outside, right? If you're $100 more expensive in bean exports, so what do? So I think there is a comprehensive packageness that is required to make the India that which you raised the right question about what is the right balance going forward. I think we would have to speed up a little bit.
Can I just add something?
Yeah.
At the moment, it is discussed to raise the import tax of palm oil, of soybean oil, and sunflower oil. Of course, this is a theoretical solution, raising the crush margin and allowing the crusher to offer soybean meal at a lower price and reduce the premium of the and improve the competitiveness. But we have to realize that at the moment, today, Indian domestic prices of palm oil are up 34% of a year ago. Domestic prices of rapeseed oil in India are up 1/3 from a year ago. So the question is, to what extent can a policy continue where the solution for the problem is uncompetitiveness of Indian farmers, which makes it necessary to raise the minimum support price for oilseeds, but at the same time close the export market. How long is it possible to solve or reduce this problem by raising import taxes if prices are already at the current high level? And this is a very difficult political decision. It has social impacts. What can the consumers bear, particularly in the current situation where economic growth and disposable income is declining?
I think rightly so. It is titled Equilibrium, this context of this webinar. The equilibrium for the government to find is between the consumer price and the farm incomes, in the context that 70% or 60% of the population farmer are also the lowest rate of the consumers. So the government will have a very delicate balance between what price to be for the consumers and at the same time make exports also possible. And I agree with you, duty is not a only solution, tactically maybe, but the longer solution is in broader framework, in the strategy of it, because eventually you can't get outpriced, and whether the farmers will get benefited because they market within 2 months. After that, the crop is in the hands of the processors and the millers. So whether the consumer get taxed for this so-called intended benefit to the farmers, I think that's a comprehensive. I would like to have another webinar, not because we want to do webinar because that's the most needed and very genuine topic. I will only say Sandeep ji can ask one or two quick questions because we're running out of time, and then we got our 10 minutes on the price outlook, please.
Yeah, Thomas, now let's go to sunflower oil, which is very dear to India. And as you know, India has been importing the world's largest importer of sunflower oil. We've been importing 2.5, 2.6 million tons per annum. And we have been importing our requirement about 65% from Ukraine and from about 10-15% from Argentina and 10-15% from Russia. So with this kind of import and being the world's largest importer of sun oil, and what we are hearing right now is the sun oil crop, which was estimated 2 months back in Ukraine was about 17 million tons, and now the forecasts are which are coming or the observations are coming that it will be about 16 to 16.2 million tons. In Russia also, 2 months back it was thought of 15.2 million tons, and now talk of again 14.2 million tons is coming. And we saw the Romania also some shortage. So overall, whatever was estimated 2.5 months back, now we are 2 million lower than that estimate. However, this 20 million ton, 20.2 million ton is still matching the previous year's production. So considering in that side kind of a situation, what is your view on the crops?
Thank you for the question. We assume that the production is going to be somewhat better than you have indicated. I think 14 to 14.2 million tons for Russia is too low. Well, a lot of uncertainties, but we give you our tentative estimate. We think it's too low. Our estimate we showed last week in the monthly 14.6 million tons. So not too bad for Russia. Difficult situation, damage in the south, better in central areas. For Ukraine, we still expect 16.7, which is a record. Last year was 16.4. We still make a record. Some losses in Romania, in Bulgaria. It has not rained for 6 weeks. So yes, we have seen a significant deterioration in the production potential, but some of the market estimates I've seen recently, in my opinion, are too extreme, and I would be a little bit more conservative. Production in the European Union total, we have a larger crop in France, we have a larger crop in Spain, and also in Hungary. Overall, combined sunflower seed production in the European Union and in the CIS countries is virtually unchanged from a year ago. And last year was a record. Now, what does this mean on prices? I think we discussed this in the next chapter. The market has been surprised by these developments, and the market sentiment has totally changed. Farmers have become more reserved sellers. Crushers try to get sunflower seed as much as possible to cover their export commitments for sun oil and sun meal. So the market sentiment has changed, and what this means on prices we can discuss in a minute.
Thomas,
sorry, I forgot something. On top of that, Argentine production is deteriorating. It has been very dry. The planting window for Chaco, for northern Argentina, is going to close in the next couple of days, another 10 days or so. So we may be losing 100,000 hectares probably in plantings in northern Argentina. Buenos Aires plants only later, November or so. So there's still time, but overall the Argentine situation has tightened, and the reduced crush and the reduced export potential for sunflower oil and sunflower meal has contributed to the rally and the price premiums in sunflower oil on the world market. Sandeep?
Thomas, you rightly said the estimates are quite varying, and there's a lot of gap in the estimates of sun oil production. But sun oil production still, even in the extreme estimate, is going to be matching the last year. It's not below the last year. So
Correct.
supply is going to be there. 20 million ton, 20.2 million ton is still there.
Yes.
And one more thing is the very high sun oil prices which we saw in July and August and even in September now. The demand destruction in India for sunflower oil is happening. I think with the very high price of sunflower refined oil, still we are in disparity vis-a-vis imports, and consumer demand is going to be reduced by at least about 5 to 10%. Recently, I believe China has been a very strong buyer in the Black Sea markets, and China has covered a lot of sun oil, mainly 400,000 tons quantity people say for O&D. And that's the reason the prices have gone up in sun oil, which otherwise would have been little more. So, with this, Sudhakar, now sun oil discussion is nearly over. And as far as the price outlook is concerned, we will take in the next session.
Yes, please.
So,
I think
yes, Sudhakar, you tell me.
Yes. I think in a buffet like this, the prices outlook is the dessert. It's served very nicely. But more than ever, this time the prices are interlinked. How do I say that? Low palm imports, the mustard oil prices shoot up like crazy. The Horeca is shut. The used cooking oil exports are very less out of China. The fuel refining is less, so the methanol prices started shooting up. India, everybody is under these sad circumstances of COVID, washing our hands. The soap demand has gone up like crazy. So the stearin is globally, also in India, is rallying like anything. Though we imported a lot of palm oil, there is a shortage of stearin in west coast of India because the need for soap making is huge. So I look at the prices as a dynamic puzzle, interlinked very closely. In that context, we would have to be very specific. Suppose I want to know, everybody wants to know, September to December, what is the price outlook range? If you want, you can break it into 2 months and 2 months. Sandeep ji can help. Palm oil, soybean oil, sun oil. Let's talk about the prices.
You are right. It's the dessert. The question is it sweet or sour? Depending on your position, right? Now, where should we start?
Palm.
First of all, I think. Well, I think it's also interesting to look at the spreads between the oils. First of all, I think that the prices of soybean oil and palm oil have moved rather closely together. I expect that the discount of palm relative to soya is going to widen. I see palm oil prices dropping in the next 3 months, all based on our current production estimates and consumption estimates, with the swing factors which we partly mentioned. The price adjustment, I think, should come from palm, moving lower with stocks rising in the next 3 months. I say this although we believe that we have seen the peak in Malaysian palm oil production already in June. Very unusual. Now the June was high because statistically high because the May was low, so there are some statistical distortions. But I say this, although the peak is behind, and the peak will not be in August, it will not be in September, it is already behind. I think palm oil weakening in the futures market. What is the range? Will it go to 2,400? I think yes, we could see 2,400. 2,500 to 2,600, very likely. For December, February, well, normally this is a period in which palm oil prices are strengthening, and this is a period in which palm oil production is seasonally low. This could again happen this year, that we see some price support in palm because of seasonally low production. Very difficult because we don't know how the palm reacts. We have a different seasonality in particularly in Malaysian palm oil production, and what will this mean for production in January, February, March? Difficult question, but I would assume that there is a possibility of some recovery in palm oil prices in December, February. Yeah. Soybean oil. Swing factors, Argentine crush. We could be surprised that the crush turns out below expectations. We could be surprised that Brazil becomes a more active buyer of soybean oil because of their own domestic tightness. The Brazilian government has already started to reduce the mandate for September, October. It is very likely that they will keep the mandate low because of the domestic tightness, but we have to see, will they purchase Argentine oil or not? A very difficult question, and we don't know what the Chinese government is doing. Will they continue to raise? Will they keep imports relatively high and continue to build reserve stocks, although the soybean crush is going to run at a record level and continue to grow October, December? We currently have surplus stocks in meal. We have seen some reaction of the Chinese crush lately because of high soybean meal stocks. I think this is temporary. Pig numbers are up from a year ago. The pig industry is expanding. The poultry industry continues to expand. They are making progress, and I think that we will see offtake of the meal. So there should be sufficient oil on the domestic market, and we should see some slowing down of the Chinese imports of soybean meal, but we don't know whether this happens. I expect soybean oil to stay relatively firmer than palm oil, but probably also show some moderate weakness. Sunflower oil. Sunflower oil at the moment has a premium of about $50 over South American soybean oil for November, December. Last year, we had a discount. Last year, there was surplus in sunflower oil. Last year, relatively weak sunflower oil prices were necessary to create additional demand. This year is different. This year, we had large forward sales in sun oil from China. India was more hand to mouth, if I read the Indian market correctly. But China, yes, well committed. Is that right? India hand to mouth. India had the problem that domestic prices of sunflower oil were too low to encourage forward purchases. But other countries covered, and they covered at a time 6 weeks ago when or 8 weeks ago, when the expectation was still for another bumper crop in sunflower. Now, this is not going to happen. And now there is a change in market sentiment that farmers are becoming reserved sellers. Crushers have to buy, they have to crush because they have to serve their export commitments, and a completely different ballgame. Sunflower oil is running the risk of damaging demand. Sunflower oil could outpace, go too high, and lose demand to soybean oil. This would raise soybean oil prices and contribute to the widening of the discount of palm oil. This will be a difficult way forward. Sunflower oil has to find the right price, and this also depends on the elasticity of demand from several importing countries, including Europe. And Europe has a problem of shortage in rapeseed. Now, we have seen some very interesting development. We covered this in today's flash, actually. A very interesting development in France, where the government announced an additional tax incentive of 20% for the biodiesel industry if they use rapeseed oil instead of palm oil. So we are actually seeing, in a scenario of a declining European rapeseed crush, a pickup in French consumption of rapeseed oil for biodiesel. This is affecting the sunflower oil because it is actually shifting at least some demand into sunflower oil. So it's very complex. Sunflower oil is on the high end, rapeseed oil also. The risk of outpricing itself and having to find an equilibrium where the prospective sunflower oil crush will be sold. Sutaka?
The palm oil range, do you see by December end or November end, BMD, given the fact that BMD is already underpriced, the cash prices are not coming down. So what do you expect the prices? What do you want the Indian prices players to do with respect to palm oil buying?
This is a very risky question because you can remind me in 2 months or 3 months when I'm wrong.
We do.
Well, I've given you my opinion. I think there is a relatively high probability that palm oil prices decline. Timing is almost. Let me say this. Timing is almost impossible to say. Everybody has to follow day-to-day markets, and what we discussed today has to be adjusted as time moves on and new factors are being revealed. This is an ongoing process. We can discuss the current situation, and everybody listening should adjust his opinion and adjust what we say today basis the developments we are going to experience. Well, I think I said what I can say, but don't bring me on icy land, please.
Sandeep, you got a different way of asking?
I would say Thomas is very candid and very right. Nowadays, it's not time that you can forecast anything for 3, 6, or 9 months. And in fact, we have to, like the theme of this seminar is also the key factors to find equilibrium. So that means we have to identify the factors which are going to influence the price and see every day what is the reflection on those factors, and see if some new factors have come in. And that is how we can take a call on the price. I think that's a very rightly said by Thomas, and I totally believe into this. Okay. And this seminar is just rightly trying to find all the factors.
Okay, can I just add something? Although I'm probably not polite, but let me add something. One of the questions was, are we going to see an increase in the export tax of sunflower seed from Russia? I think this was a very interesting question by one of the participants. And let me say, that it is currently being discussed to raise the export tax of Russian sunflower seed to 20% from the current 6.5%. Or to be more precise, export tax of 20% or a minimum tax of $80 per ton. Of course, this is also such a swing factor which we have to keep in mind. It is very likely that the Russian government will do whatever they can to prevent a repetition of last year's huge exports of sunflower seed. That means whatever they do, they probably also can continue the current regulation, and the current regulation is that every exporter has to apply for an export license before he can export. This could also be extended into the new season without raising the tax, but actually keeping a hand on the amount of exports coming out of Russia. This is also one of the swing factors we have to watch, and we don't know what the government is going to do, but if they keep sunflower seed exports low, this of course is raising Russian export supplies of sun oil.
Okay.
Yes, this is to protect the local industry and give local industry time to crush more and export more finished product than the raw material.
Of course, this is a request from the domestic crushing industry, of course.
Okay, gentlemen, we had a fantastic discussion with all the possible key drivers. The thing that we could do in a short span of time. Let's take the questions Q&A session. So over to Vipin for putting his questions to some of us.
Thank you, Desai, and thanks for the lovely session for all the panelists. For us, key takeaway as we see, correct me, Thomas, if I'm wrong, we are saying about increasing stock of palm oil in Q4. We are talking about lower crush in Argentina and probably increasing premium between sun oil and soy oil and palm oil. So that's the key takeaway, probably 3 million metric ton demand loss in biodiesel. These are the 3-4 key takeaways that I see. And I've seen a lot of questions being asked by Mr. Sandeep and Mr. Desai to Mr. Thomas. So I'll give you a little bit of a break to Mr. Thomas, turn the table and go straight away for Mr. Sandeep to ask some question. He has the habit of asking a lot of questions. So let me start with him. Sandeep, the first question and linking it to what Mr. Thomas said, increasing premium for sunflower oil and how demand will be affected in India. So this question has come from Portugal by Mr. Costa. He's asking, we always talk about inelastic sunflower demand in India. As per you, how much is this demand? And if premiums do rise from here, at what level shall we start seeing demand destruction for sunflower oil?
Vipinji, thank you. For our friend from Portugal, India is the largest importer of sun oil in the world, and Indian imports have increased from 1 million ton to 2.5 million ton in last 5-6 years. But right now it is 2.5 million tons. We are very price sensitive at the moment, although we have very good refiners and very good brands in sun oil in India. But relative spread between soya and sun is of a lot of importance, and especially in the months of October to December and Jan and March. As Thomas rightly said, last year sun oil was equal to soya oil, maybe a little less also in Jan and Feb. But this year the sun oil for November and December also, if you say soya oil for OND, if you say what is quoted right now, CNF India, is something around $780. And as against sun oil is quoted about $830. So there is a $50 premium right now. So with this kind of a premium in India, south of India is a market where sun oil is predominantly consumed, and that market is the demand change can be 5%, 7%, not more than that. But some sun oil, if it is equivalent to soya oil or cheaper to soya oil, is consumed in the west coast, that is Kandla. Maybe 100-200,000 tons is usually consumed in December and Jan. But this time, if sun oil is going to be costly by $50, that demand from west coast of India and Kandla is not going to come. So overall demand, if you see in India, if sun is going to be at a $50 premium for new crop, in the old crop we are seeing the premium is more than $100 or $110, $20. So with this situation, our demand will not exceed 2.5 million tons. The regular demand growth, which should have been about 10%, that we should have seen a demand of 2.75 million tons in coming year. That may not be seen. We may be just static at 2.5 million tons.
So Sandeep, if I understand you correctly, you are saying at $50 million, $50 difference, we'll just see demand staying at about 2.5 million tons for import. Anything more than that, probably we can lose some demand from here also.
Yes.
Okay. Next question, Sandeep ji, is slightly tricky from your good friend Paul from Singapore. Since I'm asking this to you because you see probably more execution than any of us combined throughout India with all stakeholders. His question is, how can we make the trade execution more transparent? And probably we have seen some firms moving into blockchain, but any other idea, any other suggestion that you would like to put forward here?
Hello to Paul. He's a good friend and he is always innovative. He wants to develop new systems of trading and new systems of execution. I'm aware of that. And you rightly mentioned about blockchain being tried by a few multinationals together also, so that we can get away from this LCs and documentation moving and all that. So I know these new innovations are going to come in, but however, the speed of this innovation is not going to be very fast. And execution, I believe right now in India is getting smoother and more organized and much better than what it was maybe 3 years, 5 years back. Although we are not up to the European standards or other standards, India is, the business in India happens India style, So all the sellers, regular suppliers to India, they know how to do business in India, and they've been really doing great business and growing their business. And 15 million ton market we are in the world, the largest importer of edible oil in the world. And I think our trades and executions are getting executed smoothly. But new technology and new innovations are always welcome. Paul, you can always step in.
Sandeep, one more question, which I would say is being asked by everyone. What are your views on duty and tariff restriction or the quota restriction that people are talking about? What are your views? Are these the only way out to increase self-dependency for India?
Vipinji, if you ask me my own view, I believe quotas are not going to be useful to anybody. Quotas invite a lot of bureaucracy, a lot of socialism, a lot of corruption, and a lot of confusion to not only the domestic players but international players also. So I believe quota should not be there, and probably under WTO quotas is not allowed as well. Coming to duty increase, I believe, as Thomas also rightly said, that long-term solution doesn't lie only in duty increase. Long-term solution lies in increasing productivity, giving the technology to the farmers, giving better seeds, better pesticides, and giving him other benefits so that he increases productivity in the farm. And some area diversification from wheat and rice and sugar towards oilseed. These are the more important steps which government is likely to take under the technology mission on oils, which is shortly going to be announced. As far as duty increase is concerned, 5-10% duty increase can happen, and it will give some support to the farmer, maybe offset some subsidize the meal prices so that export of soya meal takes place. For that, I'm not averse, but long-term solution is increasing productivity. That's more important, and definitely no quotas. No question about quotas.
Thank you, Sandeep ji. We come to Mr. Desai. There are two conflicting set of questions which probably I can combine in one. One is, when do you think government would allow import of RBD olein? And second is, when do you think we'll stop import from SAFTA countries? So two questions with diametrically opposite answers, and so I would just like you to combine these two and let us know what are your views.
I like conflict management. As far as olein imports or soya refined oil imports are concerned, you see, we stopped the licenses. We got the licenses out of the way in February. Till now, there is no supply chain challenge. I think industry has managed a very good supply chain. There is capacity to refine it in India, and we have inverted duty structures in some of the products. So I think it has been sealed more or less that India can refine and focus on crude oils So I don't think that there is a need for soy refined oils. In fact, one of the industry from Make in India perspective, the demand has been that the soy refined oil also should be coming under restricted list, because the Indian refineries pay a duty of, let's say, 38%. But whereas if the zero duty imports happen, it's obviously domestic industry does not like. So there has to be a solution to be found. We are trying to represent rightly, understanding all the stakeholders, because there are compelling reasons of these political treaties. So we have to find a solution for that. But definitely there is enough capacity to refine in India for sure, and we can do the manufacturing Make in India here. Yeah.
Yeah, there's one more question. This one is from Mizoram, and the question is, we have established that Mizoram is a place where palm cultivation can grow substantially. Do you think Government of India should give some MSP or MIS support for palm cultivation in Mizoram? And what's the time frame that we can look at for establishing a good palm cultivation program in Northeast?
I think starting with the Honorable Prime Minister of India, of late, we have seen that India needs to import substitute palm oil with the palm cultivation. Palm cultivation, if we have to learn from Malaysia, Indonesia, it requires 5 years, 10 years time frame. And till then, it requires some corporate capital investments also. In order to achieve this objective from 300,000 hectares, if you want to even go to 50% or 60% of 2 million potential that has been spoken about in the last 1 decade, I think you will have to give something like 12,000-13,000 rupees of per hectare initial investment support for making this happen. It's a big task, especially in Northeast. You have to really manage the whole environment of estates management. As far as the risk management of the domestic palm produce is concerned, I think that is the easier part of it. I think first we have to invest and make production happen. As IVPA, we had created one strong young people steering committee of young generation who have worked very nicely on the domestic self-sufficiency or a partial improvement in palm production, and among various factors we have presented to the government. I think soon we are expecting, if given an opportunity at the interministerial committees also, to present what is our industry view of how to improve domestic production of oils and oilseeds, not only just the palm in Northeast, but even where it is currently being grown. So there is a potential, but it's a lot of work to do. If need be, we can take global help in terms of how to organize and manage the whole environment. One of the main things is to attract investments into this sector. This sector has not been investing much, neither in branding or cultivation or investment. So we need to get that point back. But yes, there is a potential.
Can I ask a question to this? Do you allow me?
Yeah, please.
Yes, please.
How realistic is this? So the question is, the research which has been done in India, what yields can you realistically expect? And even more important, what is likely to be the production cost of 1 ton of palm oil? Can this be done without irrigation, without artificial irrigation? And if so, without irrigation, what yields can be expected? So how realistic is this, that India needs higher domestic production? Fine. But to what extent do you have to support the palm oil price produced in India to make it feasible for the industry?
My favorite question. Thank you for that question. You see, in India, the yields are in every crop. It is subnormal. It is below the world standards. I think we all know it. But let's take, if you go to soybean fields, you will find 1.2 tons crop also, but you will also find 3 tons of crop per hectare, because there are varying degrees, even from short distance also these yields can vary. So I think putting the things together, India may not want to achieve the so-called 4.56 million tons of output. But even if you get 2 or 1.5 to 2 tons per hectare among the oilseed fields, this would be still economically viable. And there is also a social objective behind it, because a lot of people are dependent on this agriculture, making this happen. I think it's already running well in coastal Andhra Pradesh. Palm plantations are running well. It is only question of expanding the same model to a bigger level. I don't believe that 2 million tons will happen in a jiffy, but I think in case we double and triple in the next 6 years, from 300,000 hectares to, let's say, 600 and a million tons, I think it is practical to look at it. It's a question of how we make reach the subsidies and government plan of action. Thomas? Yep, please.
Yeah, so Thomas, finally you got to ask the questions, but the table turned back to you. So starting with the question on biodiesels first. First question is from a couple of people in Singapore. I'm combining 2-3 questions. What is the percentage of world's vegetable oil which is currently being used in biodiesel? Second part of the question is how sustainable is palm oil biodiesel in countries where mandates are not very strict? And third is more about Europe. What do you feel how biodiesel consumption is getting affected in Europe in particular? So these are the 3 questions which are from our participants in Singapore, Malaysia, and Europe.
Yeah. In the current calendar year, 2020, approximately 16.9 million tons of palm oil is going to be used for energy. 16.4 for biodiesel and HVO, and 0.5 million tons for electricity generation. This is approximately 22% of world consumption of palm oil. If we look at all oils and fats, it's approximately 15 to 16% what we use in the energy sector. Second, and if you need details, please contact me. I can send you more details on this. And we have here also the breakdown, the feedstock usage for biodiesel. We have the breakdown for each individual oil by country. Second, in those countries where there are no mandates or where the mandates are not enforced, biodiesel production is dropping. And there are some countries where in high price periods, biodiesel production and consumption is being reduced on purpose to curb the increase in prices. Europe. For Europe, we have just raised our estimate of biodiesel production. We now look at a biodiesel production of 13.9 million tons. This is still down by 1.1 million tons from last year, but we have to understand that imports of biodiesel into the European Union are declining, and they are declining more than we had expected, and therefore we have slightly raised production. Consumption of biodiesel in Europe is probably going to decline by 1.8 to 2 million tons in the current year, and this for several reasons. We had lockdowns, we had movement restrictions, we have now a second wave, COVID in Spain, in other countries, other European countries, traffic has been reduced, diesel consumption is down differently from country to country, but with total diesel consumption down, also the total consumption of biodiesel is declining, even if you keep your mandates. But we have some countries in Europe where the mandates are not enforced. And not to enforce it at the moment is of course understandable in view of the big premium of biodiesel relative to fossil fuels. The third part of the question was what? I forgot it.
I think you have answered the entire question.
I've answered this. Great.
Yeah. Next
And
question.
if I forgot something, everybody can please contact me and we send you additional information.
Sure. Next question is, readers have pointed that you have given the ending stocks of Malaysia as 2.2 ending of December and ending stock in Indonesia. But I don't know whether I missed it or people did not pay it. They're asking absolute number of production for palm assumptions 2020
Yes.
compared to 2019.
Of course. Malaysia, we estimate palm oil production at 19.4 million tons. Probably a little bit on the high side, but this is our latest estimate, 19.4. And last year was 19.9. So we are down. Actually, Malaysian production has been sideways for 4 years in a row. This is unprecedented. Ladies and gentlemen, this is unprecedented. We are in a new ball game. The total area in Malaysia is only increasing slightly because of Sarawak and a little bit in Sabah, Peninsula not. And to make things worse, there is a long-term decline in Malaysian yields per hectare. So this is a very, very serious situation for India and other countries which are dependent on imports. Consumption in Malaysia is 3.3 million tons against 3.6 last year. Biodiesel production apparently was better than we had expected in Malaysia. Yeah, exports 16.9 million tons in the current calendar year. Last year 18.5. So, and of course imports. We have imports of 0.8 million. So this leaves ending stocks of 2.2 million tons compared with 2.0 million tons last year. We expect a recovery in Malaysian stocks. Yeah, and this is with a question mark because of the many uncertainties we have in soybean oil, sunflower oil and rapeseed oil. Indonesia, we expect the Indonesian production to decline to 43 million tons, a decline of 1.2 million tons from last year. This is our new number. 2 months ago, we still expected Indonesian production to increase, but we have followed all the publicly listed companies very closely. And we were surprised to find out that most of them had a poor performance and registered a decline in production. And we assume that also in the smallholder sector, probably more than in the plantations, that in the smallholder sector, yields are declining because of reduced fertilizer application end of 2018 and throughout 2019. And the palm tree does not forget. This is reducing the palm tree's productivity for 3 consecutive years. So 43 million tons. This number could be a little bit on the high side. Too early to say. Total consumption almost unchanged. 14.7 million tons. Last year, 14.8 million tons. Reduction in biodiesel, but a quite significant increase, and this is interesting, a quite significant increase in Indonesian consumption of palm oil in the oleochemical industry. And I think Sandeep mentioned this, or Sutaka, more requirements for health products, home care and body soaps and whatever, and rising food demand. 14.7 million tons. Exports declining, in our opinion, by 2.1 million tons in the current calendar year to 20 8 million tons. Ending stocks 5 million at the end of December as compared to 4.65 million tons. And again, everybody who wants more details, please let me know. It's my pleasure to provide this. Thank you very much.
Thank you, Thomas. Very, very informative reply, and I think more information that what we are anticipating for. Probably we have time just for one last question. It has come from a person based in Nigeria. Question is why LATAM CPO prices are lower than Malindo origination? And is it that products from LATAM are now losing their tax benefit in Europe?
The question is why are prices of
why Latin America CPO prices are lower than Malindo sourced CPO prices?
I am not aware of this, and I have to say I have not followed the crude palm oil prices. He's talking this gentleman is talking Latin American, so Colombia, for example, Guatemala, FOB export prices of crude palm oil. That is what he's talking about. I am not aware of this, and I'm sorry, I cannot comment. Is anybody else who can comment?
I would say Vipinji on this.
And yes.
We had discussed this possibility of importing from Colombia to India because the prices were competitive, and even by paying a higher freight, like from Malaysia, Indonesia, we'd get in a freight of over $23-25, and there we would have to pay about $55-60. But the ASEAN treaty with the duty, import duty was a problem, because from Malindo we are getting, or from ASEAN we are getting at 37.5% duty, whereas from there we will have to pay 45% duty. So that 7.5% duty plus surcharge was the problem. Otherwise, this year we would have seen the flow coming from Colombia and other countries to India. Maybe after the ASEAN agreement expires and it becomes a level playing field for everybody, we can see vessels coming out of Latin America to India. As the Latin America has flooded the palm oil in Rotterdam tanks, you see many times the Rotterdam palm oil price was not FOB price plus freight, FOB Indonesia plus freight to Rotterdam, but it was much lower at much discount. So this flows could be possible after the ASEAN agreement expires.
Thank you, Sandeep. We will catch you later sometimes for the ASEAN agreement discussion. But for now, I think that's all the time we had. Thanks to all the panelists. And probably I leave the floor to Mr. Kamra, who's General Secretary for IVPA.
Respected Mr. President, our most valued invited guests, ladies and gentlemen, it's my privilege to have been asked to propose a vote of thanks on this occasion. I, therefore, on behalf of Indian Vegetable Oil Producer Association, extend a very hearty vote of thanks to the speakers for sharing with us their valuable and opinion on key drivers for veg oil price equilibrium today. A big thank you to Mr. Thomas Milkey for his invaluable insights, for sharing with us his critical analysis on global and Indian vegetable oil markets, his meaningful reflection on edible oil demand and supply, and also giving us vital forecast on stocks and prices of palm oil, soybean, and sunflower, with a rider of adjusting to developments. I must mention our deep, sincere appreciation for Mr. Sudhakar Desai, the brain behind this webinar, and for all his initiatives in making this webinar happen. Thank you, sir, for presenting us with the scenario on biodiesel, palm oil, and for leading today's bus session. Further, IVP extended sincere thanks to Mr. Sandeep Bajoria for demonstrating and aptly summarizing scenario on soft oils and skillfully driving the bus session. I also wish to express my gratitude to Mr. Vipin Gupta for his support and for conducting outstandingly the question and answer session and making the attendees question reach out to the respective speakers. I also extend thanks to all the executive committee members of IVPA for their relentless support extended for this webinar. I may also like to express our sincere thanks to the technical team, Mr. Gulam and Mr. Raul, who have worked tirelessly and provided all the needed support to ensure smooth conducting of this webinar. I have an important announcement to make. That recording of today's webinar will also be available after 24 hours on IVPA YouTube channel as well as our website ivpa.in. You can search IVP on YouTube and subscribe to our channel. ladies and gentlemen, once again, I want to state that we are grateful to all our speakers and participants. We thank you for being with us this afternoon. It's been a great pleasure. Thank you very much and look forward to many more such endeavors.
Thank you.
Yes.
Thank you.
Okay. Was fantastic. Was good enough for this day. Time well spent. Thanks everybody. Keep continuing to Oil World. Subscribe to Oil World for the dynamic information, challenging times. Thank you very much. Thanks everybody. Bye for now.
Thank you. Thank you.
Switch off. Yep. Thank you.